That was the old clip from the Jetsons. I miss the Jetsons.
I do too. That was a good
I
show.
miss old school TV.
Yeah.
Yeah. I'm ready to go back to the rabbit ears.
I miss Looney Tunes.
All right, so let's talk about the stock market and kind of wrap things up after this with a little conversation on oil afterwards, because I think that's a big, we've been, big proponents of energy and oil, and we'll give you an update on that, because if there's anything that we've been early on, it's that. Early
say
is
the
wrong.
least.
Yeah. So well, we were right, and then we were early again. So
shifted on us.
yeah, we'll talk about that in a second. So the stock market back in June of last year, when the markets were making lows for this bear market decline, things were pretty grim in people's attitudes. And we said, okay, we should expect some kind of bear market rally. And since then, and we shared that chart, since then in December, January, we came back out and said, you know what, we still believe it's a bear market rally. You can see it, Justin maybe point out there in October at the bottom. Yeah, that, we bottomed out in October, really, and since then have just been grinding higher. And so we drew this line of demarcation that said if the market is above that blue line, it's probably have as an attraction higher. And in the last few weeks, people have gotten incredibly negative. Everybody's expecting the market to crash. And then especially when you got all the bank failures coming out, everybody was expecting that we'd already be, this is the S&P 500 is at 4,100 right now. People would have been expecting it down at 3,000, 3,500, right, with everything that's been going on. That hasn't happened. That's what happens in bear market rallies is you get these little short squeezes that keep going. Eventually it'll lose steam, but we're just not there yet. And markets love to create maximum frustration. That's it. So what I would think happens here is while everybody's super negative, expecting the market to go down, what does it do? Probably squeezes a little bit higher, like we have here on the chart, maybe 42, 43, 4,400 even. I don't know if it has that much fuel in there, but possibly. And then I think later, then I think you roll over. So that the what we said in January, the pay me now, pay me later market, my attitude hasn't changed.
Yeah, same.
And our allocation shows it. Our exposure to the stock market is less than 10% for a reason.
Well, and the market's had a real tough time getting over that 40, at least the S&P getting over that 4150 mark.
Yeah.
I mean, the minute it gets over that, everybody's selling.
Yeah, somebody's coming in just whacking it.
Yeah.
So
Well, that's what you said, the frustration. It might get up there, and it's going to give you the thought that it's going to go down, and then it turns and rips higher again. So.
Yeah.
Well, and right after those, the last few weeks, there was a huge number of shorts out there, and what did the market do? We ended up on an up week.
Yeah.
Squeezed everybody out of those.
Yeah, and that's the treacherous part of the market. Bear market rallies are really hard to play, and so that's why it's just best to be patient and not do a lot. And so it's the next move that matters. And so right now it's best just to kind of sit back and wait for the ball to come into your mitt, and then look for the next play.